Hello guys, how you doing? I've put a scenario here for us today. If I gave you the choice of £1 a day for 30 days, or to start with 1p and double that amount every single day for 30 days, which option would you choose? A or B? I will give you 5 seconds. Well, congratulations if you chose option B, because at the end of that month, through compound interest, that 1p transformed to 2p, 4p, 80p, 16p, 32p, 64p. So as you can see, it transformed into a snowball, and at the end of the month would have compounded to 14,322,733 pounds, as opposed to option A, 30 pounds. Why am I discussing this? Well, first of all, if you are 90 years old, this video is not for you. It doesn't matter. But if you are in your early 20s and you're now starting investing, this video is supremely important. Why? Again, because of compound interest. I've run the numbers, I've gone through every platform that is out there and compared all of their simple, plain, and also hidden fees, and I will show you in this video what I found out. Admin fees are crucial for an investor because they eat your returns and reduce it. The most important thing to understand about compound interest is the fact that the £1 saved today is on average £2 in 10 years, £4 in 20 years, £8 in 30 years, £16 in 40 years, £32 in 50 years, £64 in 60 years. Basically, on average, S&P 500 index returns 7% a year. That compounds in 10 years to double the amount that you have invested. So that's why compound interest is the eighth wonder of the world. Okay, now compounding interest aside, I compare every major robo investing platform available in the UK with their fees. My first assumptions would be a portfolio of £100,000. I know this is a high capital for most people, but later on I also run the same model with a capital of £10,000 to see the difference. As you can see, by platform there's an annual total fee, and they run from 0.37% plus a nominal amount up to 1.09%. In addition to that, there's also an average annual fund charge, because those platforms, they would put your money into a fund. So you need to sum them both. So in total, you're paying on average about 1% with these platforms. Again, Money Farm, for instance, you would be paying almost 1.5%, which is pretty high. So in terms of robo investing, I think my favorite is Moneybox, but still, I don't think that it's a good option for most people, unless you really don't want to spend any time on finding a best provider or your investments in general. I think the advantage of those platforms is that they save you time and they're very comfortable. Now, what I did was compare a platform like Fidelity, which is a pure index funding platform, versus those apps. And it doesn't sound very much, but now I made a comparison with £10,000. So let's go through here. With £10,000, here's the interest that you would accrue more or less on a fund which is 7% S&P 500 on average over the last 100 years, versus the same interest with those apps, but then paying the apps fees. As you can see, each year you would be paying a little bit more because fees also compound, such as the same compound that you use in the returns. So in the year one, Fidelity, you would pay £42 fee on a £10,000 initial capital. That's 0.35, the standard management fee, plus their funds, which go from 0.07%. That compared to 1%, the apps would charge you £100 versus £42 in Fidelity. That doesn't sound much in 1 year, but that compounds, as I said. In year 2, Fidelity would charge you 48 and the app's 112 because your initial capital is now higher. And then in year 5, 58, 134. And because your initial capital is getting lower with the time, year 10, your initial capital with the same amount of return, the same interest of return between both the Fidelity and the apps, they would differ by almost £1,000. And in year 30, the difference would be £10,000. So again, if you're starting early investing and you have 6 years ahead of you, the difference between investing via Fidelity and using those apps can be, £20,000, £30,000 in your total return. Is massive, massive. So what I did was compare every single one of the platforms that I like. So we've already gone through the Robo Investings, and now I'm gonna compare why I actually think that you guys should go for one of those 4 platforms. And they really go through different tastes. So if you like one or the other, it's really a personal circumstances that will define that, and I will show you why. So those are all the playing fees, but I will show you why it's actually not so easy to get hold of all of this. So for instance, this is AJ Bell, one of the platforms. Just studying their fees and their minimum and the maximums, and depends on how much capital you have. It really varies quite a lot. But what I try to do is really build up a form of 10,000 capital and what it would look like. And then Fidelity, again, very thorough as well. There's a whole document here that I went through in order to get every single fee. Then there is Freetrade that we're going to be looking at. We will be looking at their ISA model because we're comparing orange to oranges. Every single one of them is stocks and shares ISA. And then finally, I chose one of the Robo Investings, which I think is the best one, which is the Moneybox, and also how much they would charge. So with that out of the way, let's have a look at that. So one thing to see as well is that buying a share and buying an ETF or index fund would have different charges. So in the first scenario is we're going to have a look at those platforms by buying a share. The second scenario is by buying an ETF or index fund. If you're buying a UK share, you need to pay a UK stamp duty. That's a UK tax. That's 0.5% on the share across the board. If you're not buying a UK stock, you're buying a fund, AJ Bell will charge you from 0.12%, Fidelity will charge you from 0.07%, Freetrade will charge you from 0.5% because is what they offer if you go through their platform, Moneybox 0.12% as well. Then they charge you a foreign exchange fee if you don't buy from the UK. You get an international share, then you would be paying 1% of foreign exchange fee every time that you buy, sell, or receive dividends. That's 1% AJ Bell, 1% in Fidelity, 0.45% in Freetrade, and that's not available for Moneybox. Then there's also a purchase fee. You pay 150 in funds for AJ Bell and Fidelity, and more or less £10 a share. You don't pay anything on Freetrade. That's their promise. That's their main competitor of Robinhood here in the UK. For people who are non-UK residents, they're pretty new. Moneybox, you pay about £1 per month on top of their management service fee. Then the service fee that you pay on an annual basis is 0.25% for AJ Bell, 0.35% for Fidelity, £3 a month for Freetrade on ISA, and 0.45% for Moneybox. And then there is also the dividend reinvestment fee. If you do that, you're going to pay about 150 minimum as AJ Bell or Fidelity. Again, if you have more money, then Fidelity will be cheaper. If you have less money, AJ Bell will be pretty much the same price. And Freetrade will charge you 0.45%. Okay, so how does that look like buying a share? So here's where the numbers would look like. So buying a UK share, you would pay about £5 in tax. But if you went on a foreign exchange, US share, you would pay those percentages here. And the purchase fee, we've discussed how much the ISA service fee would look like. So Freetrade, £36, £25 for AJ Bell, £35 for Fidelity. You can see that buying a share is not available for Moneybox because they just put your money into an index fund. Which, by the way, according to the long-term assets research, 96% of the investors actually underperform versus an index fund. So only 4% overperform versus an index fund, and this 4% changes every single year, meaning that the vast majority of investors underperform the index. So it's a smart move to put your money into an index like what Moneybox is trying to do. But the point here is that all of those other platforms also offer index investing, and you can do it yourself rather than using the comfort of a robo platform. Okay, so dividend reinvestment fee, and then there is also a hidden fee, which is spreads. Basically, the way the Freetrade or Robinhood affords you to provide a free trade, not charge you any purchase fee or sell fee, is that they have large spreads. Basically, they don't execute your order with instant pricing, but actually they bulk your order together with all of the other small investors and buy them together at a later on price, which usually is a worse price than you would have got if you went with AJ Bell or Fidelity. But you don't know how worse that actually will be. So that's the kind of the hidden fee that we cannot put a price on it. So, but putting that aside, this is how much it would cost in total in order to purchase a UK share for a year and hold that for a year in each one of the platforms, and having a £10,000 capital in that share. So, and I'm already listing them in order of from the cheapest platform to the most expensive. So in this case, the cheapest platform would be Freetrade for UK share, but almost in line with AJ Bell. Then after that, Fidelity, and in the international share, it would come almost double the price Freetrade and almost triple the price for the other platforms. A total fee in terms of percentage of that £10,000 is 0.45% on UK share or 0.83% on international share. So that's the order if you're buying shares. So number one, Freetrade. Number two, AJ Bell. Number three, Fidelity. Now, last but not least, let's have a look at buying an ETF or an index fund. Here are the fund fees in each one of those platforms. This is the minimum, by the way. Then the purchase fee of each one of those platforms. On Moneybox, as I've said before, they charge you £1 per month in addition to the service fee. So you get the total fee in terms of order of priorities. AJ Bell would be the first one. You would spend £38.50 by holding £10,000 of capital into one index fund. And then the second would be Fidelity, £43, almost there as well. Number three, Freetrade, and number four, Moneybox. And that's the total percentage fee on the 10,000 capital that you would be paying. As you can see, which platform is most favorable to you depends on what you're trying to do with those platforms. So if you're trying to hold an index fund, either go for AJ Bell or Fidelity. If you're trying to buy a share, either go for Freetrade or AJ Bell. I hope this video was helpful for you. If it was, please drop in the comments and let me know. And that's it for now.
Hey guys, just before you take off, make sure that you download the admin fee spreadsheet that I'm leaving in the description so that you can play around with it. Also, I'm leaving affiliate links for Fidelity and Freetrade if you guys wish to sign up. I also don't have any affiliation with AJ Bell or Moneybox, but they are very good platforms too. So make sure that you put your personal circumstances down into that spreadsheet and calculate which platform is the best for you. Thanks very much and see you next time.